Thank you. All this set up here real quick. We will get started. All right. We're just waiting for one other person to join us on the panel. If he's not able to come in, then we will just move along without doing the actual home inspection portion. Well, thank you for joining our webinar, Unlocking Home Buying and the Secrets of Successful Home Buying, I guess. I'm Jenny Pesky, and I am the Programming and Communications Manager here at the Better Business Bureau. I am happy that everyone's able to join us today for this webinar in regards to our panelist of experts answering some questions for us today. Just a reminder to everyone that if you throughout the year would like to check out our website, bbbinc.org, that way you can see what other upcoming events we have to take place. Just to let everybody know as well, this webinar is being recorded, and later on today I will get a link sent out to you so you can refer back to it later on, or if you know of somebody who this information would be helpful to, you can share with them. And we'll also have some handouts, all of our panelists' information as well, so if you need to contact them, you can. So with that, we'll go ahead and get started. With our panelists today, we have Nebraska Realty, Heartland Properties, Pinnacle Bank, and First National Bank, all of whom are specialized in real estate and mortgage lending. The first, well, we don't have Chad with us today. So first is going to be Eric Hoffman. He is with Nebraska Realty. Eric has over 17 years experience as a real estate agent. He lives in Omaha, Nebraska, and has been here his entire life, so he knows the community well and has also always been involved. Eric's real estate is his life, and he loves working with people and promises to make you his top priority. He guarantees an honest and comfortable working relationship at your pace. Next, we have Heartland Properties co-owner and director of commercial property management, Mark Hanwright. Mark has nearly a decade experience in the Iowa and Nebraska real estate markets. His reputation for being honest and hardworking has allowed him to earn the Best of Zillow acknowledgement. He aims to make the process of buying and selling homes easier for all of his clients. Mark has also served on several boards within Council Bluffs, including as an Impact Council member since 2013, and as a member of the Chamber of Commerce Board of Directors since 2019. Next, we have Wesley Horan, who is a mortgage lender with Pinnacle Bank. Wesley is born and raised here in Omaha as well. He started his banking experience in 2018, encompassing over 5 years of experience, 4 of which has been focused on mortgage lending and his passion for real estate. Being able to help people achieve home ownership and guide them through the largest purchase of their lives has been his way of leaving a mark and giving to the community that he loves. Last we have is Gabe Corin, who is the mortgage lender with First National Bank. Gabe's mission is to empower millennials and Gen Z to build wealth through home ownership and real estate investment. So thank you again, all of you, for joining us. With this, it's just set up as a panel. All of these gentlemen have given me some questions to ask. If you have any questions throughout, please go ahead, put them in the Q&A, and we'll answer them throughout the presentation. And how this is going to work is just going to go back and forth between the real estate agents and then the mortgage lenders. And then again, since Chad wasn't able to join us, I will put his answers in the email that I send out later on for home inspection information. So first, for the real estate agents, what are the steps when buying a home?
Sure. Mark, do you want to handle this one? Or you want me to kind of go off I I guess the process that I kind of do, I typically do what I call kind of a 10-step process. Maybe there's a few more or a few less depending on how you look at it, but I usually try to do kind of an initial appointment first to discuss what the market looks like initially, and then we start determining the purchasing parameters after that. But obviously, we want to talk to a lender, so acquiring a pre-approval to do so is kind of that next step where we want to make sure that the parameters that they're thinking in their heads match up with what they can financially and reasonably do. And then we start viewing the homes. And then after we find the home that we like, we'll go ahead and write the contract. And then after we write that contract, we'll quickly send in a earnest deposit. And then number 7, we try to perform any inspections. So that's where the home inspections or any other inspections would come through. And then after those, as long as everything's going smoothly, we'll do a final walkthrough, and we'll then execute the closing documents at the day of closing. And lastly, the home delivery. So you get the keys to the house and it's yours. So that's kind of the steps. I don't know if there's anything that you think potentially that I missed in that. But that's kind of what I look at as far as the 10 basic steps.
Mark, do you have anything else to add?
Host must unmute.
Oh, sorry about that.
Thank you. Yeah, it was going to be an awkward presentation if I couldn't talk and had to write everything. No, Eric hit the nail on the head. The only thing I would add, an important first step is to get pre-approved, which is where guys like Wesley and Gabe come in to play. You want to know what your options are before you get started as far as what type of financing you're working with, because that can determine what types of properties you need to focus your attention on, and also what your budget is. Some of those calculators on Zillow and Realtor.com don't give you a true picture of what your total monthly payment is going to be. And so getting a good consultation with a lender who can guide you through different options of different loan types, different offer structures and financing is a very important first step, in my opinion. That way you don't go out, spend a bunch of time shopping for homes that you may not qualify to purchase, or you fall in love with something that you can't have. But once you got that, then Eric hit the nail on the head. You get the ball rolling, and that's the basic process.
Thank you. So then with that, for our lenders, what is the difference between pre-qualification and pre-approval?
Yeah, so I think the biggest thing to note on both of them, right, is it's still going to allow the client to understand what kind of purchasing power they really do have in the market. The biggest things to remember about both is a pre-qualification, involves a credit pull. Sometimes it doesn't even involve a credit pull. Just depends on the lender. And it's just more of a general estimate as to what the borrower could potentially afford based on input data that they provide to the lender or whatnot. Whereas a pre-approval is issued after the lender has reviewed all bank statements, pay stubs, W-2s, tax returns, all that good stuff, and truly has a more general pre-approval. And maybe Eric can attest to this, but I do think agents and And sellers would way more appreciate a true pre-approval versus just a pre-qualification. But the biggest difference is, I mean, you're not with a pre-qualification, you're not verifying assets and income. And it's just more of a general estimate based on what you're telling the lender. After, you know, they receive documents, then they can provide a, you know, a more official pre-approval.
Gabe, anything else?
No, Wes covered it. I mean, pre-qualification is basically stated income, stated assets, and pre-approval means the lender's done their due diligence and verified with documentation. So always go for a pre-approval if you can.
Yeah, and Mark, I would say, I think that sellers will certainly accept a pre-qual, but I definitely think that pre-approval, yeah, would be the way to go, just to make your offer more appealing, right?
100% agree, particularly in today's market. You're often finding yourself in multiple offer situations. So the higher level of confidence that you can give the seller that you're, you know, a safe bet, a solid deal to choose is always going to be to your advantage.
Great. What are some of the real estate investment strategies for beginners?
Most people out of the gate invest in their own personal home. You know, not many people start off with a rental property before they acquire their own, although that's not impossible. You know, there are loan types out there that allow you to purchase a owner-occupied multifamily product. That's if you have the ambition to be a landlord. You know, with certain loan types, you can buy anything from a single family to a 4-unit small apartment property, and so that's nice because you can get in with the lesser down payment requirements of an owner-occupied loan versus if you're buying a true investment property, you're generally looking more at commercial financing, which typically comes with a 20 to 25% down payment, which can be a big barrier of entry to new investors. Whereas if you're buying it with the intent to live within it, you know, FHA loan is 3.5% down. Conventional can be as little as 3 to 5, depending on the loan program. So you can get in. You know, generally you only have to live there for the first 12 months or sign an agreement stating that you will, and you could even continue to do that. Keep the one property you first acquired as an investment, and then go buy another personal residence, and Gabe and Wes can weigh into the specifics. I think in secondary market, you can do that up to 10 times, have up to 10 open loans. So that's a great way for someone who doesn't have a big bankroll to get into real estate investment. And once you get a bit of experience and equity, then it's easier to tap into those and keep the ball rolling on bigger projects.
Yeah. Yeah, I think that's great advice, and that's a really great way to kind of start for a beginner. And then obviously talking to different loan officers and such to figure out your exact financing. But I think having a strategy is very important. I think kind of planning your risk management is also super important to know exactly what you're getting into. And then I think really taking that next step and pulling the trigger. And again, you want to be prepared financially and other means, but you know, taking that initial step to start investing is big. So
What documents do I need to apply for a mortgage?
So when applying for a mortgage, it's important to understand that a lender is going to want to verify 2 things. They're going to want to verify your ability to repay the loan, and that's going to focus on income. So in most cases, the average consumer is employed by someone, and you're going to want to provide your pay stubs, usually the most recent 30 days, and typically your W-2 tax forms from the past 2 years. If you're self-employed, a lender is going to want to verify your income taxes at the federal level, which usually is going to require your most recent 2 years. And it's important to note that your income used by the lender is going to go off of your gross adjusted income, which is what you claim as your taxable income with the IRS after deductions. We're also going to want to verify how are you doing the down payment? Where are those assets coming from? That's really important. Family gift is allowed as well. So if you have a family member that's going to contribute, that is something that's allowed. But in most cases, a lender is going to verify where your down payment's coming from, such as bank statements, usually about the most recent 2 months, retirement funds, investment accounts. So the best advice I have for you is to be transparent with your loan officer and supply the corresponding documents for whatever funds that you have that you may be willing to use or not use. But in most cases, lenders are only going to only need to verify the funds you're actually using for closing.
Welcome, Chad.
Hi, how are you?
Hi, Chad.
Hi. Sorry, I was rushing to get home to get on here.
No worries. So I'll just jump right over to you then, Chad. Why are home inspections important?
Well, there's quite a few reasons why you would want to get a home inspection. Primarily is, you just, when you're making one of the biggest purchases probably, that you ever make is going to be a home. I mean, a lot of people buy a lot of things and from RVs to take extravagant vacations and everything. But when you buy a house, it has a lot of moving parts to it. It has a lot of things that can get very costly. So before you purchase a home, you really do want to get a full home inspection, just so you know what you're purchasing. As far as, you may already know it needs a new furnace, or you may know that the roof is older and we possibly are going to have to do a new roof down the road. But nobody wants, any surprises when they purchase a home. They want to move in and, just enjoy the home with their family and their neighbors. So when you move in, if you have a sewer backup or the dishwasher starts leaking, it just really puts a damper on your, the investment that you just made. So if you get a full home inspection, most of the time when we do these, I mean, we're not warranty companies, but we're going to find pretty much all of the defects that are going to be visible, or all of the defects that we can. I mean, we can't tell you how long the dishwasher or the roof is going to last, but at least you're going to have a good idea of what you're purchasing, and hopefully have a list of items that are going to need some repair or just to monitor, for the next few months to a year or so. So it gives a buyer a lot of peace of mind too.
All right. For the realtors, what's the value of having a realtor when buying a home versus going out and doing it on your own?
You go ahead, Eric.
Sure. So, I think in general, having support from your realtor, the expertise and then experience, there's a laundry list of 175, ways that a realtor can help with the buying process. But fundamentally, I think that, your realtor typically has local market knowledge, the negotiation skills. They can handle your paperwork. As far as the closing process, they kind of get you through to that. Obviously, they provide you access to homes, but not just homes that are on the market. Sometimes they have access to off-market properties, that sort of thing. They can be a big time saver. They also provide kind of an unbiased opinion, or sometimes their voice of reason, because purchasing a home could be a very emotional process, and so they're great for that. And then they can also provide you other resources besides themselves, such as an introduction to mortgage lenders like we have here today, attorneys, contractors, that sort of thing. So that's kind of it in a nutshell. And like I said, there's a laundry list of hundreds of things that we can do. But anything you want to add, Mark?
Yeah, I would say experience and protection are the biggest value that an agent brings you. The average homeowner might buy a home once every 8 years, whereas we do it day in and day out, you know, potentially 100 times a year. And so it's just having seen all the ways a deal can go bad, and having the knowledge to navigate the, you know, a title issue or an appraisal issue or something that comes up in a home inspection. What's a reasonable expectation or solution, or what's a valid reason to run for the hills, and just kind of be a counselor throughout the process and make it a smooth and seamless experience for the buyer.
Right. And I think we all know there's no two deals that are alike, right? So
Next for the mortgage lenders, this is a two-part question. How does my credit score affect my mortgage rate? And then also, what are the 4 C's?
Yeah, so I think this can be we could talk for hours about this piece, but to try to make it simple, one of the biggest things I want to hit on first is all the different loan types and their credit score minimums, right? So FHA and VA require 580 for the lowest. However, I have heard of VA loans being done under 580. Not something we do at Pinnacle. The lowest we can go is 580, and then conventional is going to be 620 for the lowest, right? So one other thing I want to mention about it is when you have multiple borrowers on a loan, or if it's just the single borrower, you have to take the lowest of the two, right? So let's say you have a husband and wife applied, and you know, the husband's got a 750, but the wife's got a 630. We have to use the 630 for the qualifying score. And sometimes it actually makes sense to remove the wife off of the file just to improve your rate. It's also important to understand that how much you put down and what your score is kind of work hand in hand together in determining the interest rate. Whereas if you're putting 5% down and you have a 700 score, putting another 5% down at 10% down might give you a different rate, even though your score is the same. So that's something that's important to mention. There is one other thing I wanted to mention about it. NYFA, which is a different loan program that we have here in Nebraska, does have an extra overlay for all of their loans. They do require a 640 score for conventional FHA and VA. So like I said, we could go into how your score impacts the rate and talk for 30 minutes, but that's just kind of the bare bones and basics. As far as the 4 C's, character, credit, collateral, and capital. So for character, and what is your ability to repay the loan, right? What's your income source? How long have you been employed there? Do you have a history of job hopping or anything like that? Obviously for the credit, you know, do you have credit established? Do you pay your bills on time? Do you have any late pays? Late pays are going to hit your credit the most, it feels like. I mean, there's other things that would, right? But we see late pays and it really can hinder your credit score heavily, right? Collateral, in our world for a home mortgage, obviously the collateral is the home in the you know, a situation where you would fail to repay the loan or miss payments, we would, you know, want to make sure that our collateral is stable. That's where an appraiser would come into play, and we'd want to get value on the house and understand our situation from a bank's perspective, because at the end of the day, I mean, we truly are the first lien holder. So we just want to make sure we're protected from a value standpoint. So that's where collateral will fall into play. And then capital, right? What are you worth? Do you have any additional assets, retirement income, owned assets outright? Do those other assets have liens against them, stuff like that? Those all can be compensating factors to your credit profile. And just can help strengthen your loan overall. But I think that's probably all I have on that. Like I said, we could talk forever about it, but I might start turning into a Fannie Mae selling guide if we do that. So, Gabe, do you have anything else to add?
No, Wes, I think you covered it. Very well done.
What are the benefits of a seller having a home inspection before selling?
Well, there's quite a few, and one of the biggest things I think was when you get a pre-inspection done is, with realtors, sellers, they want to have as clean a deal as possible. So, when you potentially get a buyer for a property, you want that buyer to come in and, not run into any issues during that transaction and get it closed on time. So if you get it pre-inspected, we're going to get, kind of what they see, all the little bugs out. We're going to find all there might be a couple major issues, but for the most part, all the smaller things, from little electrical or plumbing issues or handrails, things like that, we can get all that stuff up front, get it to the seller right away, get it to their agent. And then, you know, they have the opportunity at their time and their expense to get all that repaired. And, you know, most of the time you can get that stuff repaired a lot cheaper too, because you can go out and probably get a few estimates or even use your own contractor, as to where if you wait and then the buyer comes in and gets their own inspection, they decide they want a bunch of little things fixed. You know, you're rushing to get contractors. Maybe the buyer even decides, well, let's just take $1,000 or $1,500 off the price and we'll fix it all. Whereas you might have been able to fix all that for $400 or $500. So that's kind of one of the main reasons too. But again, it's just liability too. It takes a little liability off of the owner of the property, just, you know, getting all the defects right out there. Of course, the seller disclosure is very important. So when you get the full home inspection, we'll have, you know, all the defects that we can visibly see on that report. You know, the other thing is you're getting the pre-inspection done. Really, you know, for the market that we're in right now is a little different, of course, than like the COVID market, but you might find a house here in some popular areas that just, you know, they just sell so fast. And if you get it pre-inspected, it really helps out with a lot of the buyers too, because then, you know, some of them just can't get a home inspection because the houses are selling so fast. The seller and the seller's agent, they won't even accept any offers that have a home inspection contingency. So it actually kind of makes it a little fair for everybody. I really feel sorry for some of the first-time home buyers out there that, you know, they don't understand homes so well in the home buying process, and they find a house that they, you know, want to put an offer in on. And, you know, if they put an offer in on it and they can't get a home inspection just due to, you know, being the house is so in such demand, it's just fair to everybody, because then they can see a copy of a pre-inspection report and know what they're buying ahead of time. So getting those pre-inspections, it helps buyers, helps sellers, and it really takes, I think, a lot of pressure off the real estate agents, and you know, it just gives everybody something to look at ahead of time. I mean, I always think, you know, when you get a house ready to sell, you're coming in, you're getting it all cleaned up, you're staging it, maybe basically decluttering the house. You know, you want to find a value of the house, of course. You got to do comparative market analysis and stuff. So you might as well go ahead and get it pre-inspected too, and you've got everything all ready to go up front. So when you get a potential buyer, it's just nice, clean transaction. So.
What are some of the current real estate market trends and predictions for 2024?
It's a difficult market to anticipate right now. You know, there's been some pretty intense competition from the buyer's perspective since, you know, early 2020. Who would have thought a worldwide pandemic would have had the impact it did on the real estate market here? But kind of ever since then, we've seen a shortage of supply and a high demand. As rates increased a little over the last 12 months, we did see some buyers, you know, fall back, but we also saw listing inventory drop as well, because some sellers who are really pleased with their 3.5% interest rate don't see the advantage of moving up to a more expensive home at a higher interest rate that they'd likely secure today. And so we still see a pretty significant imbalance, at least here locally, between supply and demand, which drives up competition. Majority of the offers that I'm representing buyers on, there are multiple offers on the home. And so then you need to really craft your offer to be as attractive to the seller as it can be without compromising anything that's important to you. To Chad's point, if a property's pre-inspected, you know, a buyer might be more comfortable writing an offer without a home inspection contingency, because their eyes wide open to the defects of the home, and you may be more likely as a seller to receive an as-is offer too, because there's not that sinking feeling of what I have missed as I walk through in the 10-minute walkthrough with my agent. You know, that's not their opportunity to truly make a $500,000 decision or greater. And so, yeah, I don't anticipate that we're going to see a big shift in the next 12 months from, you know, supply demand perspective. you can find conflicting articles somewhere interest rates are going to go, but I think, and Wesley and Gabe probably monitor that closely than I, but I get asked it daily. I would say, expect more of the same for the near future, but difficult to see what's going to happen 12 months out there.
Yeah, I think that pretty much covers it. And I think it's pretty impossible to predict rates, obviously, but you have experts that probably feel rates are doing something in the next 12 months. Is that correct, Gabe?
You know, what I would say is that, we obviously get that question all the time. Nobody has the crystal ball, and markets are going to speculate things just like everyone else. The key is, in real estate, getting started now is better than getting started later. And one of the good perks about mortgage lending is if you can afford the home you want now at the current market rate, you buy it as long as you can afford it. And then when interest rates come down later, you can refinance and take your interest rate to a lower rate and save money each month and annually for essentially the same product. So why pay more when you already have the home drop from 7.5% to 6.5% when rates come down? So there's, unless you can't afford it in this current market, there's not really a time to wait, because you're going to miss out on, the opportunity costs where your home is going to appreciate on average year over year and grow in value, and you're going to be paying principal down. So again, if you can do it now, do it, and you'll catch the lower interest rate when that opportunity comes across and refinance later.
Hey, Gabe, I have a question for you. So if somebody did purchase today with the intention of, hey, I'll just refinance when rates go down, I hear a lot of people say that. Let's just say it's 8-9 months down the road, refinancing, sometimes gets kind of expensive. Are there any programs that like you have or anything that allow you to refinance for a certain price, or, to eliminate, or not eliminate, but to not have to pay for another appraisal or something like that?
Yeah, so there are. The most favorable refinance program is for VA loans. They have something called an interest rate reduction loan, which is basically, as long as the veterans' payments have been on time and it saves them money, they're guaranteed to refinance at the lower rate that's offered with no appraisal. But as far as most consumers go, FHA, and conventional loan refinances, if it makes sense, you take the opportunity. Closing costs can actually be rolled into the mortgage loan, so it's not a cash out of pocket expense, which is important to note. Most lenders are going to try and calculate the cost versus savings. Your closing costs are a little bit cheaper on a refinance than they would be on a purchase loan. And most of us are going to try and encourage you to understand that your goal with refinancing is you want to break even in cost versus savings within a 2-year period. Assuming you're going to stay in the home longer. There's exceptions to that. There's even ways to waive the closing costs on refinances, which is a conversation better had with your lender at that time. But the key there would be premium pricing, where if you want to take a slightly higher rate, the interest or the closing costs could be waived. And if you're saving money anyways, then it's up to you to make that decision.
Okay.
How long does the mortgage process typically take?
On a purchase, the mortgage process is going to take similar to, not always the case, but similar to what the contract states as far as when is closing from time of contract to the closing table. Most mortgages take somewhere between 30 to 60 days. But again, if you do a full pre-approval up front and you have all of your documents ahead of time, that process is probably going to be quicker for you. A lot of times it's going to adhere to how quickly can we get the title work from title, and how quickly does the appraiser get the appraisal back to us. But the average turn time is between 30 to 60 days for a mortgage. Wes, do you have anything you want to add to that?
Yeah, no, I think you covered all of it. The one thing I did want to mention is, in some cases, depending on the age of the property, when the last appraisal was done, and how much you're putting down, you can get what's called an appraisal waiver, which could speed up the process, which means you could actually just accept, the secondary market accepts the value that we give it in the system, and you can actually avoid an appraisal, which can speed up the process. But other than that, you covered it all.
Good point.
Is a pre-inspection the same as an inspection that a buyer would have?
Well, they're essentially getting, of course, the difference is the pre-inspection, of course, we're giving to the seller. And of course, a buyer's inspection, the buyer gets it. So, they both pay for their own inspections, but we still do the same inspection. I mean, even if it's for a buyer, for a seller, I mean, ethically, I mean, we're still gonna go through that house. And I get, the problem with some of the pre-inspections are sometimes you get the seller walking around with you or looking and trying to fix things as you're inspecting things. So it can get, a little confusing, but for the most part, they're really the same thing. It's just when I do an inspection for the seller, it is for the seller only. And what they choose to do with that report is kind of up to them. So kind of just, we don't share that with anybody else. We let the seller decide who they want to share it with. But when you look at the two reports, they're pretty much the same. It's just that whoever pays for that report, it's their report. So I usually do share one, of course, like with the real estate agent. And then, if the seller or the buyer is okay with it, everything's electronic, we'll be happy to share it with anybody. But the reports generally look the same, if it's a pre-inspection or a buyer's inspection.
And then I'll do one last question for everybody. So for the realtors, what are ways to make my offer more competitive besides just the price for the market right now?
You want this one first, Eric?
You go for it. Go for it.
All right. The type of loan that you're using often plays a factor in the seller's decision. The various loan types come with their own caveats. VA and FHA might trigger some required repairs through the appraisal process. So the type of loan that you select can play a factor. If you're competing with a cash offer, that can weigh into the seller's decision. Contingencies too are the biggest differentiator. So is your offer contingent on a home inspection? Is it contingent on an appraisal? Is it contingent on you selling another home or some other, loophole that from a seller's perspective could conceivably cause the deal to fall apart? And as I said earlier, the seller is always looking for the safest bet, the surest line to a closed transaction. They don't want the deal to fall and go back on the market and have to go through it all again. If you can't waive an appraisal, some people offer a gap, where it would say, hey, I know I'm offering you a premium price. It may not appraise here. I'm willing to cover, 10 or 15,000 extra if the appraisal comes in lower. That obviously gives the seller a higher level of confidence if we're pushing the limit on pricing and know that we may be above what recent comps support. But ask the seller's agent is the best advice to me. Have your agent reach out before you submit an offer and find out what the competitive playing field looks like. If you're told there's no other offers, you have a little bit more leeway in the terms that you want to include in your offer. If you find out there's a line around the block for showings and there's already 10 offers on the table, boy, you got to sharpen your pencil and throw the whole kitchen sink in there and swing for the fences. And that's hard to do for a first-time buyer sometimes, or if you've got to sell a home to move to another one. And that's where a good lender comes into play, because there's a lot of creative things out there. Bridge loans, same as cash loans, all kinds. In this competitive market, lenders are getting creative too, and having good partners both on the lending side and the agent side can help you craft your offer to be as attractive as possible to a seller.
Yeah, and I think just to add to that, and we've talked how, the home inspection is going to look the same one way or another, but in having no contingencies, is a big thing. One thing, though, if there wasn't a pre-inspection and you really wanted that home inspection, and I know most realtors, recommend it if we can, right? But having a quick turnaround for a home inspection, the purchase agreement right now states that there's 14 days to do your inspections, where a lot of times we'll make our offer more appealing to the seller by saying that we'll have that home inspection done quickly. Now, I don't know as far as home inspectors, if they like the quick turnaround,
Hmm.
hey, I need this done in the next 2 days. You know, that can be tricky sometimes, but it's very appealing to the seller. And then there's other small things, and Mark kind of touched a little bit on it, but asking them what's important to them, like closing date, that sort of thing. But another thing that recently, you know, came to play in a deal that I just did, was the offering some post occupancy, so they had time to move out into their new house. And that's actually what kind of won over. There's a lot of similar offers. We had 11 of them, but one of them had the thing that the sellers could have 7 days post occupancy, which allowed them, you know, a full week to be able to move to their new house comfortably, and that pushed it over the edge. And that's the one my seller ended up going with. So lots of different ideas that can really help make your offer more appealing besides that purchase price alone.
Yeah, every seller has different motivation for selling, so understanding what's most important to them will help you put the best offer forward.
Exactly.
Are there any first-time homebuyer programs or incentives available right now?
Yeah, there's almost always, at least some in the state of Nebraska, some sort of first-time homebuyer program. Wes touched on this a little bit earlier. There's this program called the NIFA program. Again, has that 640 minimum credit score requirement. They do have income limits as well. NIFA stands for the Nebraska Investment Finance Authority, and they're a state nonprofit, and they can offer actually subsidized interest rates. So what that means to you as a buyer is that interest rate is paid for through subsidies to offer a lower rate than what you could get on the typical market, regardless of your credit score, assuming it's good enough. They also do offer down payment assistance to help with first-time home buyers, you know, closing costs and down payment. They offer up to 5% of the purchase price to go towards covering both of those items. And, you know, for example, if you're getting a conventional loan or an FHA loan, you need somewhere from 3 to 3.5% down to the purchase price. The NIFA is going to loan you 5%. So that's going to cover all of that and even leave, you know, 1.5 to 2% left over to cover your closing costs. So you could get in to your new home with as little as $1,000 out of your own pocket. Could also be a little more than that. Depends on price. The down payment assistance portion is actually very affordable. It's paid back at a 1% interest rate over 10 years. So again, they're a nonprofit. They put caps on the fees that can be charged from the lender. They put some caps on what fees can be charged by the broker, for the real estate agent as well. So it's a great program. And if you look around, ask your local lender. They're going to have the best understanding of grant programs that may or may not be available for first-time buyers in your market. And that's something that typically an online lender or someone that's not local is not going to be aware of or be signed up for, because a lot of those you do have to be within the state that you operate in order to qualify for those or offer them. So lots of options. Not every option is best for you. Down payment assistance may not be best for you, but it's worth having that conversation because there's likely more out there that you don't know about.
Wes, anything else?
No, I think Gabe hit it on the head there. I think NIFA for sure is probably the most popular one for first-time home buyers. I think we see a lot of issues with the assets available. So the down payment assistance program, the 5% additional loan seems to benefit everyone greatly. The only thing I would have to add is on the grant programs, we do have some here at Pinnacle that we associate with. However, the funds available, they allot so much to each bank that participates, and the funds available drains extremely fast. Usually comes out in like April, May. And so, I mean, I think we're already done with everything we've had. And it was, you know, that's the end of it. So it's just on the grant programs, if your agent's talking to you about that, or a lender, you know, it's important to get ahead of that and get your reservation in early in the year or as soon as they open up. So something to think about.
And then last question. As a home inspector, do you also offer to do the repairs and improvements based on the inspection, or do you refer that to someone else?
Yeah, no, our standards were certified with the American Society of Home Inspectors. And we have to follow a pretty strict set of ethics, just as everybody else. And we're not really allowed to do any repairs or, I can recommend a few people here and there, but I don't get any remuneration or anything. So no kickbacks. It'd be like one of those things if I came in and inspected your house and I found 3 or 4 little plumbing things and maybe a roof repair or something. And then I told you I'd go fix all that stuff for $500. This doesn't look very good. So, it's just a conflict of interest. So generally, no, we are not supposed to do any repairs, anything like that. I know, there's some home inspection companies out there that also own roofing companies and may own like an insulation company and maybe a handyman business or something. I'm not quite sure how they get around doing all that, but really with us in Cornerstone, we do the inspection and whoever wants to do the repairs, or even if they do repairs, we just really leave it up to them, the real estate agents. And, but again, I just give recommendations if a real estate agent needs a good roofer or a good plumber, if I know one, I'll refer them out. But for the most part, not at all. We don't do any repairs on any of our inspections. So.
Well, thank you to all of you for helping us out today and answering all these questions. I greatly appreciate it. And thank you to all of the attendees as well today for taking time out of your day. I'm hoping that you're able to take away a few key points that these gentlemen gave to us today. I know I am. I rent, so this was very informative to me as well. So I appreciate that. Thank you. Again, I'm Jenny Tepeski with the Better Business Bureau of Midwest Plains. We will be sending out this webinar as well as some of the additional links for you guys that we discussed and also all of their contact information. Also in that email, there will be a link for a survey. We appreciate any feedback. We're always striving to do better. So please let us know how you felt on this today. So thank you everyone and have a great day.
Thanks, Jenny.
Thank you.
Thanks.
Get it.